Have you noticed how silver prices seem to jump like a roller coaster? One moment the demand is soaring and the next it's cooling off. But why is that happening? And which countries are behind these swings? In today's video, we're diving deep into the world of physical silver investment, which means actual silver coins and bars that you can hold in your hands. According to a recent report by Metals Focus and Silver Institute, the top 4 global markets, including the United States, India, Germany, and Australia, make up a total of 80% of global physical silver demand. It is a huge concentration in just a few countries, and their buying patterns are anything but steady. It rises and falls sharply, creating what the markets called wild swings. Physical silver investment refers to buying actual silver, like coins or bars, for keeping or trading later. As I've already mentioned, that countries like the US, India, Germany, and Australia make up a total of 80% for its demand. Recently, it has been nothing but calm. It has been swinging up and down dramatically. The phrase wild swings isn't just a catchy headline. It reflects real and dramatic changes in the way how a market behaves. Imagine silver demand doubling in India almost overnight because of a festival season, then plunging once the celebration ends. Or think about US investors rushing to silver because the inflation data comes in hot, only to dump it when interest rates stabilize. These aren't slow or predictable moves, but they're sharp, almost whiplash-inducing changes. And because these 4 markets dominate global demand, their swings can ripple across the entire silver industry. For example, a surge in one country can push the global prices higher and vice versa. United States. The US is one of the most important players in the silver investment market. Americans often view silver bars and coins as both a hedge against inflation and a safe store of wealth. Whenever the economy looks shaky or inflation expectations rise, investors quickly shift money into silver, driving sudden spikes in demand. At the same time, US buyers are very price sensitive. If silver gets too expensive, demand can fall just as quickly. This constant push and pull between enthusiasm and caution makes the US market one of the most volatile. As a result, global silver prices often react strongly to trends in American buying behavior. India. India has a long cultural history of silver ownership, making it one of the world's largest silver-consuming nations. Silver is not only purchased as an investment, but also as jewelry, gifts, and for use in festivals and weddings. Because of this cultural connection, silver demand in India tends to surge during festival seasons and marriage periods, creating seasonal spikes. At the same time, silver is also used as a financial hedge in India, especially when inflation rises or the Indian rupee weakens against the US dollar. When prices climb too high, however, demand slows down sharply as households pull back. This unique mix of cultural and economic drivers makes India's silver market highly unpredictable. Germany. Germany is the largest silver investment hub in Europe, with investors often favoring silver coins and bars as a safe haven asset. Many Germans turn to silver during times of financial instability, inflation, or uncertainty within the European Union. Demand tends to rise quickly when economic concerns are high, especially during market stress or geopolitical risks. But just as in other markets, if stability returns or interest rates make other investments more attractive, silver buying can slow dramatically. German investors are also known for preferring physical silver over paper assets, which amplifies the swings in actual bar and coin purchases. This behavior places Germany firmly among the top global markets influencing silver demand physically. Australia. Australia's silver demand is shaped by both global and local influences. As a major mining nation, Australians are more familiar with precious metals and often see them as part of long-term wealth protection. Currency fluctuations, especially movements in the Australian dollar against the US dollar, can drive sudden increases or decreases in demand. When the Australian dollar weakens, silver becomes more attractive as a hedge, causing a surge in physical buying. But when the local currency strengthens or global silver prices spike, demand can ease off quickly. These cycles make Australia another important driver of the global wild swings described in the Metals Focus or Silver Institute report. If you're thinking about investing in silver, these market swings are more than just background noise. It can directly affect your returns. For instance, if you buy during a sudden demand surge, you might be paying near the top of the market. But on the other hand, entering when the demand temporarily slumps could give you a much better deal. The challenge is timing. Since these swings are tied to events like Indian festivals, US inflation reports, or European economic data, they are hard to predict with precision. That's why analysts often caution investors to take a long-term view with silver. Instead of trying to chase every up and down move, understanding the cycles is very important and then build positions gradually. Physical silver investment means real metal. This refers to buying actual coins and bars, not paper assets like ETFs or futures. Investors prefer physical silver because it feels more secure and tangible, though it also comes with storage and liquidity challenges. The US, India, Germany, and Australia dominate demand. These four markets together account for nearly 80% of global physical silver demand. What happens in these countries can quickly influence global prices and availability. Demand in these markets swings wildly. Buying patterns rise and fall sharply due to cultural events in India, inflation concerns in the US and Germany, and currency shifts in Australia. These swings make silver more volatile than many other assets. These swings directly impact global silver prices. Sudden spikes in one country can push premiums and prices higher, while slowdowns can lead to quick pullbacks. Because these markets dominate, their actions ripple across the world. Investors need to stay alert and informed. Timing is tricky, so many investors use a long-term approach or average their purchases. Watching global economic events and seasonal trends can help avoid buying at the wrong moment. So what do you take away from all this? Physical silver investment is a story of both opportunity and caution. The top four global markets, including the US, India, Germany, and Australia, are driving almost the entire world's demand for silver coins and bars. And their demand patterns are far from steady. They swing based on economy, festivals, currency moves, and investors' moods. So for anyone investing in silver, the lesson here is simple. Stay informed. And for that, all you need to do is subscribe to my channel because you'll find the latest financial news on my channel before anywhere else. With that being said, this brings us to the end of this video. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up, and I'll see you in the next one.